Are you wondering what's going on with the San Jose real estate market in this crazy time of coronavirus? How's the market changing and what is it looking like? Well, stay tuned as I share some week-by-week data to give you an indication of what's really going on in the market. Hi, I'm Theresa Wellman with homeownerexperience.com, a local San Jose, California real estate agent. I educate my clients with real data. So today we're definitely going to dig into real stats and understand what's really going on with the market now considering coronavirus. This is going to be an update or follow-up to the special update I did just recently. So here is the data for San Jose single-family homes through March 2020. The prices for March data actually went up 8.7%, and the number of sales were up 18.6%. So a significant improvement from February, as we would expect. Today, technically, San Jose is a seller's market because the days of inventory is down to 25. But as you all know, we had a shelter in place put in effect in the middle of March. So let's talk a little bit about that. Pending sales are actually down slightly from February to March, which is some indication of exactly what happened mid-March with the shelter in place. And inventory is only up 8%, much less than we would expect for March, again, due to the shelter in place. But the closed sales came in with a really strong sales price to list price of 105.8%. So there's currently 245 active and 360 pending sales in San Jose. So 59% are in contract, which is slightly down from February where it was 61%. Again, contrary to what we would expect in the spring market, but we'll dig into that further in a little bit. So here's the raw stats for San Jose specifically, with the average price of 1,364, 300 sales, 360 pending, 18 days on market was the average with 25 days of inventory. So let's look at this chart, how it looks relative to the last several years. This chart is from 2012 all the way to the current closed data of March 2020. So the yellow bars are highlighting the spring markets for 2019 and 2020. So as you can see, our March sales were much lower, this green line, than they were typically and typically are because, again, we had shelter in place influences that really slowed things down. But what I do want to point out is those closed sales and the market was definitely on an uptrend because of this low inventory yellow line that we have. As you can see, inventory continues to be low. And again, I think that's a shelter in place influence. I feel like a broken record, but as you can see, we have not had low inventory like that. This data goes all the way back to 2000. There's not been a time where we've been this low of inventory in San Jose. So we are definitely in a unique market. So I don't know if you saw this video I posted just 1 week ago, actually on April 1st. There's been a lot of questions, will coronavirus affect housing prices? So I did talk about important things such as leading indicators. And the data we just looked at is actually trailing because those are closed sales that went into contract way before this happened. So what I do want to cover today is the leading indicators with an update from a week ago. So the first indicator, of course, is the traffic through properties. It's pretty much zero. There is very few sparse showings for very motivated buyers in vacant properties only. And so that is gone way down because of the guidelines with the county right now. Number of offers received on prime properties is less than typical for this time of year and the market that we were trending towards if we look what the market looked like right before the shelter in place. Prime properties in good neighborhoods are still getting a couple offers, some cases 2 or 3. So that's a good sign that there's still demand out there for good properties. And we're going to dig into this next one, the number of properties going into contract each week and closing each week and how that's changed since the shelter in place in the next slide. These are all important leading indicators to understand, but I encourage you to watch this video if you haven't yet to understand a little bit more about these factors and how they compare to the recent past. So here is an extension of the chart that I talked about in that previous video, but with another week's data. So basically what you're looking at here is an inventory snapshot of multiple different dates, including April of 2018 and April of 2019, so you get a feel for what April could look like. And then we're going to look at the closings per week and the pendings per week. and how that's changed or compared. So the March shelter in place here is in green, and how the market looked like before that. And as you can see, the first thing that happened is inventory went down right away. A lot of people pulled their houses off the market if they were living in them because they did not want to show, or if technically if you're living in the property, you can't show the property. So they just pulled it off the market. And pending sales did go down, as you would expect, but it was still pretty strong because some of those properties that went pending were actually able to be shown before the shelter in place and just hadn't gathered offers yet. I had one specifically that was in that situation. So as you can see, the week after that, the pendings went way down as everyone realized we were in this and there was a big change and there was a lot of fear. But the good news is the pendings were back up this last week. The closings are remaining pretty strong, but again, those properties were probably in contract before the shelter in place that are closing now. And our current inventory, only at 300. Wow, as you can tell, that is really hot compared to April 2018, which was a crazy hot market, if you do recall. But our sales are 30% less, so that, or our pendings are 30% less, so that's definitely having an effect on the speed and intensity of the market. So let's talk about days of inventory, or the supply versus demand metric. So this is something I track all the time, and I did say that days of inventory came out to 25 days in March. Now, typically days of inventory is a trailing indicator because it's calculating the sold properties versus the current inventory. So to get a little bit more of a leading indicator, I am now currently tracking the pending days of inventory. Or the pending number of sales versus the inventory to get a feel for how the market is changing. So as you can see, in April 2018, it was hot. It was below 20 days of inventory. That means in 20 days, everything in the market would sell at the current rate. In April last year, it was up to 42, so not quite as intense. And that was because, as you can see, the closings were less and inventory was quite a bit more. Now, if we look at February, we were repeating kind of the 2018 markets, and then we had shelter in place put in. So immediately things softened up back to 24 days of inventory when you were looking at the pendings. Then they went all the way up to 88 days. So that's a really neutral market leading to a buyer's market. And then this last week, because the sales went up and inventory didn't go up that much, we're actually looking a little bit better, but definitely more of a neutral market. That hot sellers market that we had is gone, but we are not in a buyer's market per the metrics and criteria right now. So let's look at the mortgage rates. Mortgage rates had a huge spike with the shelter in place on March 17th. There's a lot of reasons for that, but they have definitely softened again. That blue line is our 30-year fixed mortgage. And so we're trending, this is with some points and fees, so usually around 3.5% without the fees. But banks are operating quite a bit differently now. Some banks aren't even lending or allowing appraisers to go out, so things are taking a lot longer, and there's definitely been some influences based on the shelter in place. So the next thing really to consider is unemployment. So we only have February numbers at 2.6%, which is a little higher than we were trending the last several months, but we don't have official March numbers yet. As you all know, that has gone up. The big question is going to be, is that a temporary increase in unemployment, or will it have some long-term effects and continue to stay high? Last thing I really like to track is the stock market versus housing prices. The orange line is the average price for Santa Clara County homes, and the green line is the S&P 500. As you can see, over history since 2000, they pretty much track each other. And the yellow circles are areas where they did opposite directions. And the biggest time, or the biggest long length of time, as well as the biggest difference in the y-axis, is this last 6, 7, 8 months. So the stock market had really started to take off. The housing market kind of was flat. Now the housing market just started to take off here in the spring, and the stock market dropped. So the big it looks like they're probably going to be heading towards each other again. The question is, will the stock market recover, or will housing prices drop a little bit? But I do think hopefully they'll be in more alignment here. Thank you so much for listening. I really appreciate you watching this all the way through. If you like this information that I present, consider subscribing to my channel for market updates, as well as lots of San Jose real estate information. Thanks so much.